We got a mic check. We got a mic check. 1, 2, 1, 2, check. Mic check. Yo, let me know if you got me in the mic. Let me know if you got me in the sound is good. Or if I'm beat. If I suck. You guys got me? If you got me, we're good. If you got me, we're good. We're good. What's up, team? How the hell are you tonight? Whew. Yo, I'm going to dedicate this one. First, a moment of silence. Bob Saget. Moment of silence. Bob Saget. Dead at 65 in the Ritz-Carlton, Miami, Florida. I'm not going to say it was drugs, but I'm sure drugs helped, at least early in his life. So this one's going out to Bob Saget tonight. Sheesh. Yo, rip Bob Saget, but another good news. My youngest brother. Let's try my lighter. Hold on. My youngest brother is having a baby. That's right, Robin. I'm feeling damn good. My brother's having a baby. I'm going to be an uncle. And they did the old cliche gender reveal that I'm not into, but it was still dope because my brother goes over the top, so the food was good, the drinks were better. But I'm having a little nephew. He's having a boy. And I'll tell you this. If you are a gentleman that's had a baby before, the first one, you wanted a boy. And if you're a gentleman that hasn't had a baby yet, you kind of want a boy. But, this is a big but. If you're a gentleman that's had a girl, you're glad you got a girl. I think it's like win-win now. Once I had a girl, now granted, I'm blessed with both. But once I had a girl, I don't feel bad for gender reveals anymore. I used to I'd see my buddies and I'd be like, oh man, girl sucks, bro. Oh man, it'd be so cool to have a little bro around. One of you boys. But now that I have a girl, I'm happy if they have a boy because it's dope and that's probably what they want. But I'm even more happy if they have a girl because for two reasons. There's no bigger feeling in the world than being daddy's little girl. And I was a mama's boy. So now I know in retrospect how my mom felt. But two, every guy, even if he is a gun-toting, conservative, wish they could beat their kids when they step out of line dad, every one of those dads has like a little soft spot that wants to have a tea party and do some dress up every once in a while. That's why it's dope to have a girl. You know? So, my bro's having a boy. I told him, I'm like, that's cool, man. You're having a boy. That's awesome. I'm so happy for you. But I'll tell you this. I would have been just as happy if you had a girl. And you wouldn't have even known it. And then like 3 years, 2 years, you would have been like, oh, man. It's so cool to have a girl. John Johnson, why aren't I watching football? John, I don't really know. I don't recognize your name. And I'll be completely honest with you. I'm not really a big sports fan. I am a Bears fan. And they kept it close for, I think, 3 quarters, and then they got blown out. But the real reason I'm avoiding football this weekend is this is the first weekend that DraftKings and FanDuel is allowed in New York State. And I'm an open book. I don't really talk about this very often, but I'll tell you this. I used to have a gambling problem, and that is not good for people like me. So I don't really watch sports that much. I gamble on the stock market, which I'm going to talk about tonight because I got smacked this week. Now, I put in my YouTube poll, like what videos you want to see next. Dividend won. So we got some good videos coming out this week. We got the dividend portfolio, the stocks that I added. I know I told you last week that I was going to get that out. I didn't get to it this week. I had a snow day, which was dope. The markets were down. I was getting beat up. This ebook debacle turned into hours and hours of me sitting at the table trying to get this damn ebook out. Thank you so much to my Discord that helped me get that freaking thing out, but it's out. So I was supposed to have a video come out tomorrow on the dividends. Hey, welcome, Grant. You'll be able to talk in the chat in just a minute. I think it's a minute. You have to wait. But yeah, I was going to get that dividend out on Tuesday. The other vote was I got smacked by TQQ. I think I'm going to talk about that tonight. And maybe if we learn something, I'll get it out onto the main channel. I'll clip it out to the main channel. Show you the portfolios, show you everything I have open currently. I think I have like 9 calls open right now. Definitely shifted more into swing trading. Day trading, guys, is just not going to be for me. Mostly because I don't have the time to put in to be successful. So I set up a couple of different swing trades. I would love to get Weebull open, and maybe you guys can give me some stocks. We'll talk about some things that you might be looking at as far as leaps or even swing trades, kind of where I'm at. We had a lot of stuff pull back. So we're either going to be going into, we're either going to be going back, you know, and keep pulling back, or maybe we'll have a bounce. I don't know. Let's see what we got in the chat. Yeah, snuggles are good. What happened with the growth stock ETF 52-week challenge we're doing? Bo, that around June I did a video, the last one, because people literally stopped watching it. So like I'll give you an example, Bo. Like my videos, if you look, they get between 4,000 and 5,000 views in the first week. That's pretty average. If I have a good week, it goes up to 10. But 4,000 to 5,000 is kind of what I look at for like a 7-day hit. Those videos were getting like under 1,000. And granted, I don't really give a shit about that. I don't care. But the ripple effect of what that does to the channel and the algorithm and all the other stupid shit that goes along with it, it doesn't work. People weren't watching it. And I didn't exactly love it, so it became the dividend portfolio. So that 52-week challenge became the dividend portfolio. And I'll be honest, so we ended it in June. I made a video about it. I wish I would have stuck with it, because the whole joke of the first 8 weeks of that was what a joke ARK investments were. Like I made that challenge almost to mock ARK investments. And then I would have been right? So nothing happened to it. Just people, I like to make content for people that, like content for that people are going to watch. And I'll always have a couple of people that love little things here and there, but I unfortunately, I have to speak to the majority. And that's kind of why I like this live stream, because I can get on and I can talk about that ETF and growth stock portfolio here with the 32 of you that are live with me right now. But it didn't really get the traction I thought it was going to get, you know, and I thought that I could use my time and educate people in other ways. And I also knew that I wasn't going to avoid growth stocks and ETFs. Like, I'm not against them. So I knew that I would make videos about them eventually. And pretty much all the growth stocks became my leaps videos because I stopped buying shares. So I just evolved a little bit, man. Yeah, John, gambling is, it's, I mean, I guess inherently you have to have a little bit of gamble in you. I will say that mine was more, what you find out when you have a gambling problem is that you like to lose more than you like to win. And I never realized that. I went to treatment for gambling, and I'm going to go down a rabbit hole. But what we talk about in treatment is that gamblers, their rush isn't the money or the win or the loss. Their rush is, and I guess it's our rush, because I'm still, the rush of a gambler is, what are you going to do when your back's against the wall? What are you going to do when you've lost everything? What are you going to do when you owe? What are you going to do when you took a loan from the wrong person? That's the real rush that gamblers feel. If it was as easy as money, gamblers would make money and then they walk away. But it's always about, like, what's the next score? And mine started with poker and the online poker craze, with the movie Rounders and Moneymaker when he won the World Series of Poker, probably in the late 90s, early 2000s. I got into poker big. I was playing high stakes poker a lot. I was playing high stakes poker in alleyways and things like that. And then I got into sports betting, and then I moved to Arizona, and I was pretty close to Vegas, and it got pretty bad. But I think I use more of my positive things from my gambling days to help me now than bad, because I know how to avoid it, you know, just like any problem or demon that you have. I learned how to avoid it, but I will say it allows me to handle swings of money. It allows me to keep emotion out of money, because when I used to play poker, we'd raise pots, right? We'd raise pots that were more money than most people were salaries and stuff like that, but it was always just chips, right? It was always just a way to stay in the game. So I think a lot like options contracts for me are just poker chips. You know, they're ways to stay in the game. And I will say, and I talked to my good buddy JJ about this this week, you know, this day trading and stuff that I did over the last couple of weeks. I started to feel those juices flowing again, and that's kind of why I have to step away, you know. And I will say this, I'm going to bring up TQQ because it's very, very valuable. I lost a lot of money for me. I lost a lot of money in TQQ. I'll get to it, but it was somewhere in the neighborhood of like $1,800. But I should have lost about $3,000. And I think because of my background and knowing myself, I didn't lose the $3,000. I learned lessons in losing that money. I should have lost less. I definitely should have lost more. Kind of where I was, but I caught a falling knife. I tried to catch a falling knife, which is like, don't do that. That's like rule number 1. So we'll get to TQQ in a second. I just want to catch up with the chat, but yeah, man. Then John, there's a little bit of Gamblers out there. Josh, what's up, buddy? Kenny, I'm doing good, man. I'm having a really, really good day. Grant, I'm going to do the Ironman whenever somebody asks me to do the Ironman with them. I'm at the stage of Ironman triathlon. I said I want to do one every age group, but I'm motivated by other people's successes. The last 2 Ironmans I've done, I did because one of my buddies wanted to try it for the first time, and I wanted to train with them because I did my first one alone, and I did my second one with a team and with friends. And I went slower in my second race, but I had a lot more fun and enjoyed it more. And I said to myself, after that race, I'll never not do an Ironman triathlon without a team, a partner, or somebody, because everything's just better when you enjoy it. So, Grant, my next Ironman is when somebody says, hey, Brad, I'm going to do the Ironman for the first time. You want to get down with me? That would be my next Ironman. Swing trades is one of my new areas I've watched for. Yeah. From Vic, I don't know who that is. Wow, gambling was one of the discussions. Yeah, I was a gambler. All my buddies want to go to, or all my internet buddies, they want to go to Vegas, right? I have a lot of younger internet buddies, like even JJ's 31, right? So they all want to go to Vegas, and JJ knows, like I say, I can't go to Vegas. I make excuses. I just can't go. You know, it's like alcoholics don't go to distilleries, you know? So I don't go to Vegas. Can you explain what a put credit spread is? Yeah, of course I can explain what a put credit spread is. So, Ivan, the reason I'll start with this. The reason I like spreads is because you can do them with little collateral. So it's good for small accounts. And that's what I used to believe when I first started doing spreads. And then I stopped doing them because I realized that there's not a lot in it for you at the end, except for maybe a little bit of money. Like it's not worth it to do spreads. If you do spreads because you like them, then that's one thing. But if you're doing spreads just because you have a small account, not a good thing. Not good at all. Like, don't do that. So we have debit spreads and put spreads. And one of them's, in both cases, one involves a call, buying a call, and then selling a call. Or one involves buying a put and selling a put. When we buy options, we pay premium, debit. When we sell options, we get money, credit. So if you sell a 2-option order and the money that you collect from the sale is more than the money that you pay to buy the option, then you get a credit spread. So in a put credit spread, what that would mean is that you are going to sell a put closer to the money. And by the money, I mean the share price. Because the closer to the share price you are, the better the premiums are probably going to be. Then what you're going to want to do is you're going to want to buy an option that's further out of the money. Okay? That's not going to be as much money. Did I get that right? I'm saying it to myself after a couple of drinks. And I'm like, that just doesn't seem right to me in my head. What did I just say? What are we doing? We're doing a put credit spread. Hold on. I'm just going to bring up a stock just so I can look at it. Let's look at Apple. If I don't write it down, I can't see it in my head. Actually, I'll show you my screen. So you don't think I'm like Googling it. I'm not that big of an asshole. Like these aren't right now. So let's say we go out to the 28th. The 28th. Okay. So if we look at the share price right now, here are the premiums. They go from, this is right now if I'm buying a call. Okay, so these are out of the money. Can't exercise these, 280. The further in the money I go, the more expensive they get. Okay. Now let's just go to sell. We're doing, what do you want to do? You want to do put spread, put credit spread. So if we look at puts operate the other way. So if we were to buy a put, they're more expensive up here. Out of the money is down here because we need the share price to drop down. Okay, so these are out of the money. So with a put credit spread, what we would do is we want to get a credit. So that means we want to be closer to the money with the sale of our option. So if I was to sell a put for Apple, right, at $165, if I add that in there, I'm going to get a credit of $247. But I don't want this to be naked. So I need to put up the cash collateral to write that cash secure put. That's $165 times 100. You need $16,500 to write that CSP. But if you were to buy a put with that right under it, and you can go anywhere you want, the further away you go, the more collateral that you need. Okay? But let's say we want to go here, 129. What you'll see is that I'm going to collect 247. I'm going to pay 129. That is going to give me an overall credit, which is why they call it a credit spread, of 118. Now, why on earth would you do this? Well, you do this because the collateral that you need is no longer 16,500. It's just the difference in your strike prices. So this is a difference of what? $250. So if I continue, good for the day. Where does it say my collateral down here? Review order. There's my collateral right here, $250. So the reason you do this is because you need less collateral. But the thing I don't like about it, Ivan, is that at the end, there's no exchange of stocks. It's just an exchange of money. So that's where it kind of got like gambling for me. So like in a CSP, you put up money as far as collateral, but then you get shares. You either have to buy share, like with the wheel strategy, you either sell shares or get shares. So there's at least an exchange of a tangible asset. In spreads, there's not. And you'd be like, Brad, you love diagonal calendar credit spreads, which is the poor man's covered call. Yes, I do. But I like them long term. It's these short-term credit spreads that I'm just not a big fan of. I am more of a fan of debit spreads because debit spreads are at least long-term where you need things to happen in your favor. But I guess I hope that explains it. Ivan, if you have a follow-up, let me know. But a put credit spread is essentially when you sell a put closer to the money than you buy a put. Because of that, you get some money. If you want your max gain is if the share price stays above your short call, short meaning the one you sold. You have a little bit of loss if it ends up in between, which is not a great situation for you. And your max loss is $250 if it drops all the way below the lowest strike. Thanks, Simon. I appreciate the question, man. Appreciate the question. 54, that's got to be a record. Guys, if you're in here, please give the video a thumbs up. I appreciate it. What other we got? Jeffrey, what's up, buddy? How are you, bud? Jeffrey's in the Discord. He knows I got smacked. I'll get to my portfolios in a second. We're all a little bit of gamblers. All right, glad I helped you. Let's start to look at some of these things that I have open. We'll go back to this. We'll go back to this one, and we'll start to look at some stuff. I like to always start on Robinhood. I can't show the dividend portfolio because I'm no spoilers. Brad, you said that last week. I know, I did. Get over it. Sorry. I don't know how big this is for you guys, but speaking of Apple, what 100? Yes. All right, I'm an index fund guy. So things that are not going great. Actually, so let me tell you how I changed my swing trading philosophy a little bit. The things that I've been like battling back and forth are, how much of my overall portfolio do I risk at one given time? How many plays do I want? And when do I write expiration? I'm not a fan of shares. I like options. It's just what I'm comfortable with. I know how they work. Some people can't handle the swings because the percentages go up so big. They go up so fast. Like, you can't just like set a stop loss at 10% because options are all over the fucking place. This is going to be a mixture of the poor man's cover call, the wheel, and also now some swing trades. And you're looking at this $27,333. Guys, I did transfer some money out of this. This was at like 40 a couple weeks ago. But I will say, if we look at the last week, okay, this is not a joke. Last week I lost $3,456.72, down 11%. This right here was the TQQQ smack, which I'll get to that. Okay. This was the smack. Let's talk about what I have open first and what I'm really, really hopeful on, because we had a tough week. There was a lot of red, a lot of pullbacks, and we'll get to the charts. We'll look at some technical analysis in Weebull in a couple of minutes, and we'll look at some of these stocks. And if you have another stock that you want me to look at and we can kind of discuss, just leave it in the chat. We'll get to it. But I'm excited for at least what should be a pullback, even if not this week, next week. Like, the market goes through cycles. Everyone's saying, like, why the market go red this week? It happens. It just happens. All right. I have an AMD call for the 28th. Right now I'm down $250. So let's take a look at this one. Expires 128. I paid $785 for this. Right now, I will pull out of this if I get to 20%. This is like depending on expiration, that's about 20% for me. Okay? And I'll show you this too while we're at it, just because for those of you that aren't in my Discord, I want to show you like how I keep track of all this. Expiration is a really, really big deal, guys. It really is. So this is like a kind of a spreadsheet that I start my morning with. And what this is days to expiration. And it's a very easy spreadsheet. If you're in my Discord, you can get this. I put it there. But these are all the calls that I have open and when expiration is. And then I have it read for like under 50 days. Because the difference between swing trading with stocks and options, I feel like I like that expiration is held over my head. I like that it forces me not to stay in things too long. Like, when you own shares, you're more likely to be like, we're at the top maybe, but I'll just hold them. But when it's expiration and you're 30 days out, you're like, I'm at the top. I still got to get out. I got expirations coming. Fate is killing me. I got to get out. So I think it forces me to make more right decisions. Okay. This also allows me to see do you notice the bell curve? If you're a statistics person, you see this bell curve, right? Which is good. I want a majority of my things to be about 3 months out. Right now, I think a quarterly is very, very good for me. Okay. So when I get up in the morning, I'm thinking to myself, how are these affected by expiration and how am I going to handle them? Like, Intel, this covered call is gone. I got a sign on this. So this is actually out, but I changed things. I just updated this for the new year, but I'll keep track a little bit here. But like this Foot Locker call, the poor man's covered calls. I mean the wheels, I'm not too worried because I don't fear assignment. It's when we start seeing pluses that I'm worried about, right? So right now, the biggest thing for me is, and I'm going to make that yellow. That's the first priority. What am I going to do with this? How am I going to manage that AMD call? When I first write this AMD call, I'm thinking to myself, okay, well, I kind of want 30%. I'll set my stop loss after 50 days at like 15%. So I want like a 2-to-1 risk to reward ratio. Right now, you're like, that's 31. When it gets under 50, this has happened over the weekend. So this is one of those on Monday that I'll be thinking about, like, okay, if I'm still down 31%, I might eat the 250 and get out of there. I might. I have 2 cash secure puts on SoFi. I'll show you the chart on SoFi. SoFi is one of those things where I have calls on them as well. 7 of them. We'll get to there. But I think SoFi, for me, is almost at like the bottom. Yeah, the day sale expiration matrix. It's got to be. My VTI, you guys will see a video this week. I answered Robin's question on why I'm trading VTI. And I actually rolled VTI up in expiration. Down in expiration and up in strike. So I actually had a good trade on them with this pullback. It was a great day. It was a great week to get some pullback on VTI. Woozy, when you write these Woozy puts a couple weeks ago and you're like, $8, it'll never be $8. Woozy, fucking Woozy. Jeez, Woozy. What's the plural for leaps? No, I think it's leaps with is that apostrophe? Yeah, apostrophe outside the S. Leapses. Or is it like goose? Is it like geese and geese? No, that's goose and geese. What's the same as the same thing? A deer and a deer. There's that deer and there's those deer. I think it's that leaps and those leaps. I think it's the same. I think it's like deer. I think leaps is the same. Leaps. This CCL, we're just gonna see what happens with that. What's the current share price of this? $22. All right, that's just so CCL is one of those cash or care puts where when did I write this? I wrote that in October, so I got $119 in October. So I don't know like what the return on that for. You guys can do the math and know where my head was at. I bet you it's about 5 to 6% I probably got when I wrote that in October. Because if I'm thinking I want 12% for the year, it was probably about 6%. And here we are. And I could close it, but I'm still happy with that. That's a pretty good one. So here we get into some of my swings. I got a March Microsoft, the Peloton debacle. Oh my God. Charles Brennan, my gravestone will read Boozy. We'll get to Boozy. Boozy's down on my list. Boozy's on the list. Stand by. My SWBIs, I still love those. Here's the TQQ that's not a bombshell just yet. I'm down a little bit, down 20%. But I made a much smarter play with this. My wife thought this was like a revenge trade because she knew how pissed I was about TQQ and getting slapped. Let's talk about this quick. Let's talk about TQQ. I've been saying it so much. I just got to get to it. I'll just pretty much show you like the long history. Okay. Maybe I should bring up, what is this, January 4th? I just want to bring up the chart just to give you like some reference of like what I was doing. And you're like, Brad, what are we looking at? I'm going to do a video on how I set this up, but we'll go to the day chart and I'll show you why this was a good, or why I thought it was a good trade and why it was a bad trade for Woozy, for this January 4th. So here we were. When I wrote this, it was supposed to be kind of like a day trade, almost a swing trade. And what I was trying to do was I saw this run up, right? And I knew that I was going to get some resistance. You can see this line I have at 180. So I saw this run up. I saw this momentum. And I thought just for a day after the break, I said, I saw this come down. I was like, it's going to go from here. It's going to come up to this resistance. That's why I made the trade. So I made the trade. Pretty much this is at the end of 1-3. So when it opened here at 172 on the 4th, I made that trade. All I wanted, or all I was expecting, was that I wanted the MACD to continue up. We were still in a fair value of 56 on the RSI. Okay. I wanted it to get up to 180. That's all I wanted. What I didn't do was I didn't look at more long term and see that 180 was pretty much all-time highs, and that we were in a position where we should have been coming down to here. Like we were here. Why I thought we were more likely to come up to here than to pull back to here, I don't know. That's where I was wrong. And essentially, and I'll show you the trades, I got in, and let's just go to the 5-minute for that day. Oh, the 4th. This was it. Oh my gosh. It's so brutal to look at. I literally got in. What time was it? What time did I get in here? I got in at 9:46 in the morning. Okay. So an 11:04 at 9:46. I got in right here. And I was like, it's going to go up to 180. Wrong. The whole day. I caught the falling knife this whole day. This whole day. I started averaging down, catching. This is the definition of trying to catch a falling knife. This day, the SPY was down. Everything was down. But I just got emotional. And I was like, it's got to come back up. It's got to come back up. And this was a 1-week expiration. So this was Monday. It was expiring on Friday the 7th. I'll catch it. By the time I got down to here, I was down, I think, $3,000. I got lucky, and it started to do this till the end of the day. When it got to here, I sold off like 3/4 of them, saved face. And I was like, it could go up overnight. I saw this. I was like, it could go up. And here's where I'm at least happy with myself. When we got to here, I said to myself, okay, well, it could. Oh, no, this was the run up here at the end of the day. Yep, this was it. Sorry. I'm looking at this little one. When I saw this from 2:30 up to 3:30, there was a part of me that almost kept my shares, thinking that it was going to keep that trend up. And I said to myself, Brad, you got smoked. Sell off 3/4 of them, save face, and then maybe leave. Because I had 15 contracts. So I'm like, maybe just save 3 and see if you can save face and we can maybe break even. This dotted line I had drawn as my break even that day, roughly. Because that's kind of like when I averaged down. And good thing I didn't. Because if I would have held those overnight, this is where it opened the next day. And I would have lost $3,000. So what that looks like as a picture is I bought 4 at $290. Then I sold one back. I was like, sweet. So I made $8, but then it kept going down. I bought one at $260. I bought one at $250. I bought one at $230. I bought one at $212. I bought one at $202. I bought one at $185. I bought one at $159. Then I bought 5 at $60. It got all the way down to $60. My first trade at 9:30 in the morning was $290 a contract. Fast forward to 11:20 in the morning. So 2.5 hours later, it was down to $60. Smacked. It got up to like 76 at 3:30, and I sold 5 more. Then I sold at 3:48. I sold another 2 more for 92. So it started to climb. Then I sold another 2 for 96, and then it dropped back down. I got out. And then the rest I had to get rid of the next day. I got rid of them at 3 cents. So I sold these 2 and I got $6 back. At the end of the day, I ended up losing like $1,600, but I learned a lesson. Number 1, look at multiple time frames, you idiot. All I did was look, and not even look at multiple time frames. Look at like zoomed in. I mean, zoomed out. I was pretty much, when I made that trade, I was looking at this. I was looking at 5 days of data, 6 days of data. Don't do that, guys. Don't do that. Also, too, don't force stuff. I was getting excited. And I learned my lesson. Now, you're saying, okay, well, so then what the hell's with this one right here? So this I made on January 6th at 3:15 towards the end of the day. Look at where it is now on Friday. The worst in my eyes, and I could be wrong, the worst in my eyes, we come down to this 180-day MA. We can come down to here. Come down to 139. I made the expiration longer to give myself more time for things to go my way. And I waited till there was in a better position, and I didn't go that much. I think this is one contract. If this thing bounces and we get confirmation and the VWAP and everything starts to turn up, then maybe I'll buy. But this was just a dumb trade on my part, guys. This QQQ. But I learned a lesson. I really did. I'm sweating. I'm so drunk. Who just sits and sweats? Does that mean you have a drinking problem? Anything going on in the chat? We'll get to SoFi in a second. Oh, good. You guys are giving me some good stuff. Good. Facebook, down 41%. Let's look at Facebook quick, show you where I'm at there. I made this trade. So when did I make this one? Because I did really good on Facebook. I sold out and then got back in December 28th. So let's go to the day chart. December 28th. I got in right here. So now I've written this down. That's why I'm down 40%. But once again, zooming out, look what's happening. We're right at that moving average. Look at the wheat chart. It still can pull back, but I still think it can go up. So once again, gave myself more time, right? This doesn't really look that bullish, but Apple's always bullish. And like I said, this goes with the TQQ, which follows the NASDAQ, right? So depending on what we're going to look at, I was happy to make that on the 28th. In hindsight, did I rush right back in after being up? I might have. But we'll see. We'll see what happens. I have that one until April. The TTCF, I've owned this one for over a year now, so this one is just garbage. I'm probably going to lose on this one. May 24th, I wrote that. I bought that, didn't write that. Same thing, Starbucks is a poor man's covered call. I've had that one since May. We'll just kind of see what's going to happen with that one. And then this Vuzi. Oh, my God, guys, look at the lifetime of this Vuzi. Oh, golly. How low can it go? I remember being on live streams being like, dude, I can't believe I got this for $400 when it was like $2,200. Now it's $415. Could pull off a whole 3% in a year if I really wanted to. Fucking, where you at, Azevedo? Jerk. Fucking jerk. But that's it. And then my good old VTI. Still going to be looking to write some puts, but not a lot of buying power. So I transferred Intel Foot Locker. Let me see. Where's my positions here? So let's go over here. I got Intel, Foot Locker, and there was another one that I transferred over here that I got. Camping World. Okay. But inside here, I have SoFi. So let's look at SoFi. SoFi on the day chart first. Like it better. So it's right here. So coming out, I have 7 contracts on them. 7 contracts for March 18th. So that's out here. So I have this line here kind of drawn of what I want kind of to happen, what I hope happens. But if we look back at SoFi's history, like it's, I don't know, Zach, what do they call this? A triple top? Triple bottom? There's names for everything. But I just think statistically, especially with the RSI and the MACD where it's at, it's more likely to come up than down. Even if it comes back down a little bit more, it can come back down a little bit more. But we talked about this in a live stream last week. So even if you're writing puts on this, I think JJ has puts open on it. But I have 7 contracts out, which I got around here. So currently right now I'm down 34%. But once I break $50 or 50 days till expiration, then I'll really be worried. But I'm looking at position ratios. If you can see over here, just trying to shake my mouse. I want to be like just under 5% of my position. Same thing with Palantir. Where's Palantir at? We'll see a very, very similar chart with Palantir. This is once again, guys, these are day candles. I have a line drawn. Same thing. I mean, could we keep pulling back with the RSI? Where's the RSI right now at? 30 something, 38, so could it pull back some more? It could. It could. But to me, we're more like to go up. That's the game that we're playing, right? We'll look and say, is it more likely to do this, that, or the other thing? Some things that I talked about last week that I'm still kind of watching. I had a win on target. It was a short-term swing, like maybe a day. Like this one's gone. I can get rid of this. But it jumped back up. I'll wait on target. If it breaks above the 180, I'll get back in. Tesla, I kind of just watch for fun. Netflix, I was definitely watching that. But with the pullback, we'll see. Same thing with Netflix on the day chart. Staying right around the 180, not really dipping down too much below the 180. It's kind of where it's at. I'd love to see this thing bounce back. The RSI is down in 22. MACD is like as low as it can go. If this thing turns around, I might watch that in the next week or so, depending on what we have. Microsoft, like I said, I'm already in a long call over there. I want this to kind of turn around and come back to normal. Life Storage, they're just popping up everywhere, and they've just been really, really bullish over the last while. So I'm just waiting for them to turn around. This is something I keep an eye on. Etsy, the same thing. Etsy, once again, one of the everything's dropping below that 180. We just had one of those weeks. It happens. It happens. CRM, the Nancy Pelosi stock. But yeah, there you are, Nancy. Nancy Pelosi needs to buy in for a little bit more. She needs to get a little bit more. What else? Zach, what's Zach got on there? What'd you say? CHWI. What does that look like? CHWI. Chewy. I love puppies. Chewy. Oh, see, dude, I don't know, man. All right, so Zach, here's what I say, because you're more into this, or you've been doing this longer than me. I see 180 on the way down. I see 30 on the way down. I see the 30 being used as resistance on the way down. I see the 180 being used as resistance on the way down. I don't see this as a long call. Maybe a long put, but I'm not sure. Let me see the week chart. Yeah, everything's down, man. Chewy? I don't know. I don't really love the Chewy right now. From what I'm looking at. What else we got? QDEL. Let's go to the daily chart first. Kind of all over the place, chopping all over the place. Not really showing any trends to me. Definitely dipped. Looks like it wants to recover. But this is, I don't know, this is just a little messy for me, right? Look at where it was. Holy cow, where did it get to? 306? Oh my gosh. The week chart. Oh, wow. So this kind of looks like Intel back in the day. I don't know what these guys do. I don't know anything about them, but bounce up. And it does look like it's using the 180. And it does look like it's using, but it doesn't look like it wants to bounce off the 180 and go up to 250. Kind of just looks like it wants to hang. So not something I'm really into right now either. Hold on, I'm getting back to the chat quick. All right, we'll throw Vuzi in here. I know what Vuzi's chart looks like, but I'm not touching Vuzi right now. Holding on to that. I'm holding on to Vuzi, my Vuzi call, and hoping that something like this happens. I mean, they have good news. I don't think they're a bad company. I frankly think that if we look at the week chart, I think this was too much. Like, Vuzi's an old company. They've been around for years. What's the year chart? Or we can even have a year chart with these guys. Maybe a year is too much. I think the COVID thing was a little bit of an anomaly, but they're still up from, when was this? Wow, April 2020, they were $2. So I don't know. I'm just gonna hold on to that. I don't know what to do with them, and even though everything's on a downward trend, still, they're kind of like Tattoo Chef for me right now. I'm not against them. I'm just not willing to go there. Another question. I have a CSP on Coin275. Expires Friday. Current share price $2.35. I'm planning to roll down an Alborex. Yeah, that's a big, $50. I'd be rolling that thing. I can't look at the prices of options because they're not updated, but if I had a CSP, that was $50 off. That's a big bag hold right there. Unless you think that they're going to come up. But I don't know if they are. I'd probably roll it or take the loss. Check out the HK candles for momentum. Willie, what's HK, man? Is that no? Sound like an idiot. Is HK? Nope. What does HK mean? Did I miss that acronym? You didn't make a lot on the cover. No, Robin. With Boozy, that's why I'm not too angry about Boozy, because I own them for free. The amount of calls I made against them. They are a zero net basis stock for me. Matthew, you talk about this a lot as far as investing emergency funds. I invest mine. I invest any money that I don't think I'll need for 5 years or more. If you think you're going to need the money within 5 years, go get it. But I don't keep any money in the bank. I got $1,000 in my checking account probably. If it wasn't going to show the account number, I'd bring it up and show you. I probably $1,000 in my checking account. But then again, emergency funds deal with income. I know how much money I make every single day. I know how much of that money is definite and how much of that money is speculative. So I can judge my emergency funds by everything. I judge my emergency as every appliance in my house breaks today. Everything else I don't really see as an emergency. Something breaks in my house, I call insurance. I break my arm, I call insurance. Anything that's not insuranceable, that's an emergency for me. So, yeah, I keep that. But I don't have a problem. Invest anything you got. SPYV. Yeah, we can take a look at that. SPYV. Is this like their value? What is this line here? What that? Oh, that's a view up. I'm like, what is this line? Let's get rid of view up. Buy view up. So I look at this and I say, kind of similar to the SPY, but I mean, it's bullish, it's up. But if I was going to say anything, it looks like it needs to pull back to the MA and the EMA for that matter. If I go to the week, let's see if we can see this a little better. It's crazy because it looks like it wants to use the 180 as support. And it does kind of here, but then everything breaks down around COVID. So this is like going to be an anomaly on charts forever. But Robin, if we think about it, this is just like, because it's tracking the S&P 500, we can kind of just, this is pretty much talking about the S&P 500. The market's overvalued. That's what it is. So whenever you look at ETFs, it's like, okay, they're tracking the markets, but they still are going to perform. Like, we need a pullback. But when is that going to happen? Is this going to continue up to $50 and then pull back to the MA? Who knows? I don't personally think I'd be going long on it because, especially, we've been in overbought territory. Hasn't really got to oversold. It got so oversold in COVID. Once again, guys, these are weeks, right? So if we go to days, we've been hanging out on overbought forever. We had an oversold here, and we see that was when it bounced. But everything to me is upward MACD, upward RSI. It would look like this to me. I would be waiting for it to go back to overbought and then come back down a little, I think, and maybe write some puts. I mean, buy some puts, but I wouldn't be super stoked on this continuing to go up. Just my opinion. IWM. You love that whack off. IWM. Oh, guys, I've been drinking. Same. I like this. I like this better than Chewy. That's for damn sure. But then you look at the weeks. Like, look at that thing. Where's this going to go? It's got to come here. It's got to come down to at least 190. But then this looks like it's just hugging, waiting to do one of these. But that's COVID. I don't know. See, this is the good thing. Ignorance is almost bliss for me when it comes to trading, because like what I don't know can't hurt me. So I just see this and I'm like, this looks like an ink blot to me. So I'm like, I'm out. I feel like there's enough stocks that give really, really strong signals that you don't have to worry about the ones that look like this to me. High divergence. Okay, good. Yeah. Lots of volume though. Looks like a lockless monster. Sheesh. All right, guys. It's about an hour. What do we got? How many people we got? 43. Good crowd. Good crowd. That's pretty much it, guys. Also, too, leave a 1 in the chat if you maxed out your Roth IRA this week. That video is also going to be coming out. Robin asked a great voicemail last week. That's actually become a sponsored video. I use it for a sponsored video with Moo Moo. My contract with Moo Moo is going to run out. Why is electricity an ideal system? Because it conducts itself so well. Yeah, but then again, Luciano, I heard that you can never trust an atom. They make up everything. Yeah, Andrew maxed out. Yeah, so this week, Dividend Tuesday, somebody asked in the chat or maybe in the Discord if I could show how I like set this up with all these different widgets on here. So I'm going to do that. It's not going to get a lot of love, but I think it's a valuable video. So I'm going to make that video. That'll probably be Thursday or Friday's video. The backdoor Roth, I got to wait for things to clear. When you backdoor, you got to wait for it to clear to get into the traditional. Then you got to switch it over, wait for it to clear. So I'm going to do all that stuff. I might talk more about the QQQ and the lessons I've learned and make a formal video about that. But yeah, kicking it. 1 week away. JJ wasn't feeling that well, so the Average Money podcast tomorrow is from October 20th. And you guys, some of you were there, but not everybody. JJ was sipping the sauce. It was one of those where I called him today and said, Jay, are you sure you want to release this episode? And he said, put it out. I said, you heard what you said? And he said, put it out. So I think I might put explicit in the title. It was the one when he's talking about his kid's soccer coach's kid. Oh, it's bad. But that's coming out tomorrow. We'll be back Average Money on Wednesday. And then I'm going away this weekend, and then I might not be here next Sunday, but then everyone's coming to town for the 99,600 subscriber party that we're going to have. Go to your line style and choose HJ's candles. Weebull has them. Look them on their formula to see the. Oh, thank you, Willie. Let me see. Chart settings. Okay, I see it. I'll definitely take a look at that. Thank you so much. Appreciate it. I'm still learning the platform as well, but I think what's going to happen is everything's going to come over from Robinhood onto here. It sucks like for the app, but then I realized like I'm just monitoring on my app, and I was doing the same with Robinhood too. I was just monitoring. So this is just a more information. It's better information. And as soon as I learn it, I'm definitely going to get down. I'm definitely more into the Weebull. So Weebull. If you're not Weebull. If you don't know Weebull, you're going to be trading. Get some stocks or something like that. All right, guys. I'm doing my beer. Sobered up on some Miller Lite. Gonna go have some good vibes. Sit on the couch. And then, I only drank one beer? Stand by. I bring two. I only drank half a beer. That's what happens when JJ's not here to talk some of the time. I'm down 5K in my stock that just got signed. Don't know what that means. Cold, it depends. Depends. I can do both. If I go to the store, I buy Budweiser, but if somebody brings over Bud Light, I'll drink them. Do you think you could teach options on Weebull? Yeah, it's the same. I mean, it's actually... So I used to think that, and I'll show you. These are the layouts that I have on Weebull right now. I used to think that Robinhood like had like a superior way to look at it. So here's kind of what I'm looking at in Weebull right now. I have 3 tabs across the top. Each tab has a different widget. So when I click, you can see all the oranges on the outlines. Those are each widgets that I placed. So my watch list, the main chart, positions, and then inside positions I have my order, and then a position for whatever I'm looking at. Everything's a widget. Across the top, this is kind of where I start the day. So these are the exact same stocks, and you can set them. You can see there's this group up here. So when I click something in my watch list, it translates that all over to here. So everything is related. So like I click an Apple stock here and I'm looking at it on my main chart. It's also going to be the thing in my time frames and then in my options as well. So I start here and I have the 1 minute, the 5 minute, the day, and the week. But then I can sort these. Usually maybe I'll take the week to the hour. So this is kind of where I start to kind of just get an idea of indicators. And then I'll probably, if I see something I like, then I'll go back to the main screen and I'll go into that time frame that I want. But options, I never thought that I would like having both the puts and the calls lined up this way. And it wasn't until I started using Fidelity that I realized how much I liked it. And granted, on Robinhood, you click calls, puts, but then there's a separate thing for buy and sell, which kind of confuses me. But let's say I want to like do puts and I come down, everything's right here. Over here is where when you click it, that's where you go to buy and sell. So it's like, if you've ever been in Robinhood and you bought a call instead of selling a call, this kind of eliminates that. It makes you click buy or sell. The other thing is that in Robinhood, it shows you a bunch of like data. Here you can sort it. Like right now I have the bid. These are the things I show, but I can show all of these different things that I want if I wanted to in this row. I don't. But as far as like placing them, right? Robinhood gives the bid, the ask, and the mid. They don't really give the last price. That is kind of the options price. Percent change Robinhood gives you. I look at delta and applied volatility. So those are the stats that I look at. And then down here is my order entry of something, an order that I want to place. And then when I'm looking to close, I just watch this chart on usually the 1 minute that I'm looking to close. So let's go back to like an option I have open. Like, so say I'm watching the SoFi. When you click the SoFi, everything switches to the option. So I'll come over to here. Now this is SoFi. You'll see low volume because options contracts don't move that much. So like if I was getting ready to close, I would watch this and then boom, I could close it right here. And then over here, it's just my account. It's worth $14,000 in there right now. It's going to be $50,000 pretty damn soon. Okay. So yeah, so I can teach how to use it. It's not that big of a deal. It's just like anything. It's just all about getting used to a new platform. And I'm getting used to it every single day. And what I'm finding out is that things that seem more complicated are really just more things to learn that are better for you. Like being able to click right on a position and let me see something. Like look at this. I'm not gonna do it, but being able to like look at a chart, right, and see your position, and then setting stop losses or anything, like you just click on this, close position, close by stop loss. You can set, like, let's say I want to close it. You could just type in $22 and I want to sell at $57. And then boom, it goes right onto the chart if it filled. It's not going to fill right now, so it's in my orders. But like, it's just so easy that everything's right here and shows you. I don't know. I'm really liking Weebull these days. I'm really, really liking Weebull these days. I'm not going to lie. So, yep. that's what we got for the 9th. That's the 9th. I'm going to finish this beer. I'm going to go upstairs. Like I said, some good vibes. Anybody else having some good vibes tonight? Would only work for my desktop. Yeah. I've stopped using apps. I found out that like if I want to use if I want to use apps, I'm like rushing. I never like make good decisions on an app. It's always when I'm sitting down looking at different things and yeah. But I'll tell you this on my way out. The best decision I've made so far in 2022 is getting off social media. And for those of you that follow me on Instagram, I got on for one day to let people know that I was going to release an ebook. And I got a rude awakening of why I'm not on it anymore. Get off social media. I'm telling you, you'll be better off for it. Guys, I appreciate you. That's all I got. Until I see you on the next one, stay positive. Work really, really hard. Always please. Find a way. Anyway, even if you don't want to do it, be kind to other people. And if you break that rule, man up or woman up and apologize. Say, yo, I was a bit of an asshole just now. I apologize. I'm going for kindness. If you're heading to bed, put on last week's live stream on mute in the background. I'm like 100 hours away from being monetized. Maybe next week we'll be monetized on this channel. Be cool to monetize on the channel. And if you're not subscribed to the main channel, let's go 100,000, 2 weeks. There's a little loser, this old dude on YouTube is going to hit 100,000 subscribers. We're going to put the play button right there. It's going to go right there. I appreciate you.